Here on the Market Day Report, from time to time, we take these commodities one at a time and get analysis, and that's exactly what we're going to do right now with Oliver Sloup at Blue Line Futures. And let's get started in the corn market here, Oliver. We've had a higher day today. We had a weekly export sale number here north of 1.5 million metric ton. September corn up 4 pennies, December up 3 3/4 at 337 3/4. What does it take to get to 350 corn now?
Well, it's going to take a lot. We've had a string of good news this week with regards to some export business to China. I believe it was the fourth largest single-day sale on record the other day, and the fourth largest, I think, to China. So some good news. The weather really becoming less and less of a factor the deeper we get into this growing season. So it's going to take a lot to get up to 350, and if you do, you could bet that the producers are going to get pretty active up there. So I wouldn't count it out, but it's going to take a lot to get us up there. Now, does that mean we're going to roll out of bed here and go make new contract lows? I don't necessarily believe that that's going to be the case either. I wouldn't be surprised to see this market come into a little bit more of a trading range between 330 and about that 350 level that we've talked about.
But we do have more of an opportunity over here in the soybean market to get all the way up to 911 if you take into consideration these sales. And on the soybean numbers right now here on our bar charts, on our live and instant quotes, we see where soybeans are up 7 pennies on the August, November, up 7 3/4 at 8.90 1/2.
Yeah, we've been a little bit more upbeat on the soybean market, both technically and fundamentally. I think there's a little bit more hope for a bigger rally and maybe retest those recent highs up near that 911, 912 area and potentially above there, especially if we continue to get decent export business here in the near future. Technically, it looks like we're starting to build a little bit of an inverse head and shoulders. We're marking higher lows. Now we just need to see higher highs. And I think that could, in itself, encourage additional buying and momentum traders to step into this market and propel prices a little bit higher here in the intermediate term.
All right, over in the Chicago wheat market, though, we're down 15 3/4 now on that front month contract of September. December's down 13 1/4. The Kansas City wheat market is also following suit. It's down 12 1/4 cents on the front month. Minneapolis wheat, it's double digits lower as well, 12 1/2. A lot of weakness in this wheat market.
A lot of weakness, but we saw a heck of a lot of strength yesterday. We had a technical breakout and some rumors that China was in the market, and that really gave Chicago wheat specifically a shot in the arm, and we've seen those spreads between Chicago, Kansas City, and Minneapolis go berserko here over the past couple of sessions, and I wouldn't be surprised to see that volatility continue. Chicago, though, is going to be where majority of the volume and participation is. We're retracing that breakout point, which comes in 530 to 535 for that Chicago area. If the bulls can achieve closes above here and defend that breakout point, they remain in control. Breaking close below there neutralizes the recent bullish development that we've seen over the last week and a half.